Hi everybody, this is Matt Slack from Farmers Insurance and the Art Rusak Agency. For this week's Insurance Tip Tuesday, I wanted to talk to you about replacement costs versus actual cash value. Every home policy, whether it's a home, condo, or renters, will specify whether it's replacement cost value or actual cash value. This is often stated as RCV or ACV. In general, replacement cost means that if your property is damaged or stolen, you would be compensated for the cost of replacing the property. Say you're like me, and you're a big fan of golfing. And if my golf bag with all my clubs was stolen, under RCV, my policy would reimburse me the full amount of replacing it with a new bag and clubs of like kind. The insurance company would not take into account the fact that I've played hundreds of rounds of golf with these clubs, causing a considerable amount of wear and tear. In contrast, actual cash value is when the insurance company calculates in the depreciation of the item. Depreciation is the decrease in value of the property over time, usually a result of age or wear and tear. In the case of my golf clubs, the insurance company would assign a value that included the depreciation my clubs endured before being stolen. As a consumer, it is generally in your best interest to carry replacement cost value on the policy, but all too often insurance agencies like to recommend switching to actual cash value to help save money on the premium. Fortunately, when a loss occurs, people then get upset when the insurance company doesn't pay what the client feels is fair value. I don't want this situation to happen to you, so I'd love to review your policies with you and keep you educated about how coverages work. If you have any tips that you'd like to see in future episodes, please leave them in the comments below. If not, thanks for watching. We'll see you next week.